This is MacroVoices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Listeners, you'll find the download link for the Postgame chart deck in your Research Roundup email. Now, if you don't have a Research Roundup email, that means you haven't registered at MacroVoices.com. Just go to our homepage, MacroVoices.com, look for the red button that says Looking for the Downloads on the homepage. Patrick, let's dive in. The chart deck is titled Sector Rotation or Start of a Bigger Correction. Well, we hit the 50-day, actually the 55-day moving average pretty perfectly yesterday on the S&P. What's the story here? Is it a sector rotation or the start of a bigger correction?
So, Eric, you're absolutely right. We hit that 50-day moving average. It was something you talked about at the market wrap. And all throughout the start of the year, we've repetitively in this segment of the show talked about what happens when the market approaches this level. And it often has emerged as a buy on dip opportunity. And so the big question is, will we see the markets do this? And again, where we're going to have a new buy on dip opportunity emerge here. And, one of the things that worries me about this is that when we go to page 3 and look at that NASDAQ, we are now definitively broken below that 50-day. And one of the things that we've seen on the NASDAQ was that it has acted in the past as the leadership sector. And so while we continue to watch this S&P 500 approaching that support, it does have to be a red flag, the fact that a major indice with so many of those mega cap tech names in them not being able to hold the line in that area. And more importantly, it wasn't even able to really make any progress above its February highs on that upside. What is interesting, and one thing that I want to continue to watch closely, is on page 4 when we actually look at the NASDAQ over the S&P 500 ratio. And one of the things that has been in place for many, many years has been the structural outperformance of the NASDAQ over that of the S&P 500. And that has generally been a great trade to just be long the tech. And what we've seen, and Harley talked about it as well, is that a lot of these tech names are considered long duration assets, and with interest rates pressures and other things, we're seeing sector rotation being so dominant. And the question now is, are we seeing a bigger picture, a more secular turn in this trend where the NASDAQ may no longer outperform the S&P 500 moving forward? And I think that whether or not inflation is transitory or whether it's more secular is going to be an important part of that.
Patrick, let's look at an inflation chart then on page 5.
Right. And so we obviously had that really hot print of inflation come in. And more importantly, it's a very big print. It's on a 10-year chart, the biggest breakout in inflation that we had. And many people are just trying to suggest that it is transitory, and rightfully so. Commodities have been very hot, and it has been creating that short-term pressure on pushing inflation numbers higher. But what if some of our guests that talk about this being more of a secular trend, what if they end up being right, and that we in fact do have a lot of pressure on inflation continuing moving forward? And that's where I want to go back to that Harley comment when Harley was talking about that the FANG stocks, which I have on page 6, are considered in his mind something like 70-year duration bonds. They're these growth assets that discount all their future earnings. And when you have interest rate pressure, the multiples get pressured on them, and they suddenly have huge headwinds. And so when we're looking at that NASDAQ over the S&P chart on page 4, and then we look at what's happening in these FANG stocks, it's going to be one of the single most important questions to answer as to whether or not this almost decade-long trend of NASDAQ outperformance, whether that has come to an end, and whether we're going to see the cyclicals really continue to take over as the leadership in the stock market moving forward.
Patrick, I love chart 5, and the reason is it's finally starting to show that the data are reflecting something that all the smart people in the room have known for a long time, which is a secular inflation is beginning. And sure, it's been true that it hasn't been reported in the data yet. Well, now we're finally starting to see it in the data. And the reason that's so significant is all the people that are blind to the macro factors that have just been saying, you guys talking about inflation are crazy. There's nothing in the data to say that. Now people who think that way are finally going to have the evidence they need to start recognizing something that's obvious to people who understand cause and effect, which is big inflation coming. So I think the fact that it's finally showing up in the data is really significant because it's going to wake up the part of the market that hasn't been paying attention to what a lot of us think is obvious.
Right. And so on that point, what I wanted to do is show page 7, where we have the metals and mining ETF over the S&P 500. And to almost the exact opposite of the NASDAQ over the S&P, the metals and mining ETF has massively underperformed the S&P 500 for many, many years. And what we've seen is that as all of these commodity bull markets have started and all these commodities have turned, suddenly we're seeing that this sector, the cyclical sector of the stock market, has materially outperformed. And again, is it transitory? Is this a short-term thing? Or is this going to be the trend that may even last for years and this sector outperform over that of the major indices? And whether this rotation is underway and whether this shift in the markets is obviously a lot to do with answering that inflation question. But this is certainly something I think is important because so many people are not positioned in their portfolios for this.
Patrick, I don't know how you can say not positioned in their portfolios. We have some portfolios like the ARK ETF that are prepared for an entirely new paradigm that's beyond my comprehension. But I did see an interview where I know that ETF in particular is got superior portfolio construction and can't lose.
Well, you know, Eric, what I really wanted to talk about when we were putting up this ARK Innovation ETF chart was just to really show that sector rotation has really come underway. I mean, the ARK ETF was taking huge money inflow throughout most of 2020 and was one of the best performing funds out there during that cycle. But since that January, February highs, this has been just actively distributed. And one of their largest holdings, which is still a 10% weighting, is Tesla, which is on page 9. And one of the big things to watch is as we see all these cyclicals and financials and value plays all take all the money inflow, have we seen major tops in these stocks? And is this distribution that has been going on for several months just the beginning of a much deeper correction in these? I mean, Tesla at this stage is under 600, and if this type of distribution cycle continues, it'll be really interesting to see whether or not we see a correction that can have this down even in the $500 and $400 range in the coming months. And so that's going to be something to watch, particularly with the type of attention that Elon Musk is getting today. Now, Eric, one of the things that Elon Musk has been doing recently has been talking crypto, and certainly he's been one of the torchbearers, to the whole movement of crypto over the last half a year, and really kind of changed his tune a little bit, and certainly creating some controversy in that space that caused Bitcoin to reverse on the downside. We were trading near 50,000 at the time when I snapped this chart, and it really looks like Bitcoin is getting incredibly heavy. One thing with these cryptos that are, in my mind anyway, that is required is momentum, because there has to be that excitement and the froth and that air of easy money that keeps momentum there. And Bitcoin really has seemed to run out of a little bit of that momentum and juice. And it'll be really interesting to see whether this is where that resistance really establishes itself on the crypto. What's your take on it?
Patrick, I think it's pretty clear that the factors that are affecting crypto markets are similar to the factors that were affecting the .com market in the late 90s. You got a whole bunch of people who have no clue how any of this stuff actually works, guessing, trying to figure out what's important, and obsessed with trying to get on the next thing, whatever is hot. This most recent nonsense from Elon Musk about how he supposedly just developed a conscience about the amount of electricity which is wasted by Bitcoin is just utter nonsense. It has nothing to do with the big picture. We are in the very early stages of a digital currency revolution. It's a story that's much bigger than Bitcoin. And frankly, what's happening right now in terms of every single cryptocurrency trade which has ever occurred is it's all very early stage speculation in a very unpredictable and wild market. Where this is really headed is not clear yet, but what's clear to me is the odds of Bitcoin being a big part of the story are much lower than the Bitcoin crowd seems to think they are.
You know, what's interesting about that, Eric, is that Bitcoin has always been the largest and one that has gained the most attention. But there is now rifts between many coiners that are basically either supporting Ethereum or Dogecoin. And so I have charts on page 11 and 12 of the other cryptos out there. And what's interesting is that there has been very clear bullish momentum in Ethereum, which has still remained very decisively in trend. And certainly the Dogecoin has certainly also been getting a lot of attention on page 12 and working as well. So it's interesting that while we can argue that Bitcoin has lost a lot of that momentum, what is interesting is that there are still cryptocurrencies out there that are doing half decent.
Well, and I think if you wanted to analyze this in any meaningful way, the comparison of the relative performance of these different currencies is much more interesting than the absolute performance of the group. And certainly looking at the contrast between page 10 and page 11, I think you're finally starting to see a little bit of market realization of something that's frankly been obvious to anybody with a technology background for years, which is Ethereum has always been technologically superior, more functional, more flexible platform for not just digital currency, but an entire decentralized finance future, which is coming. Ethereum has always been better. The number of people who knew that was small enough that the price of Bitcoin, which has always been more popular and which certainly was first, was ahead. So now we see a little bit of market recognition of technological superiority, but you don't even know if that's really what's driving it because, frankly, the Dogecoin thing, as I understand it, Patrick, Dogecoin is literally just another cryptocurrency. Somebody literally just took the source code and copied it and made a joke out of it and said, look, I created my own cryptocurrency. And they said, hey, did it as a joke, but made money on it. And, all of a sudden it's back, really just because Elon, I think, says it's back. So you look at what I think is driving the Ethereum price. I think that really is a recognition by smart people that Ethereum is more suitable than Bitcoin as being the basis of decentralized finance solutions in the real world. The Dogecoin thing, I think, is Elon talking up nonsense, something that never made any sense and suddenly got popular because Elon started talking it up. So we're at we're at the infancy of this market, and it's still being driven by factors that have very little to do with logic and rational assessment and much more to do with herds and trends and people getting excited about things they don't understand. Very similar to the late 90s with the dot-com stocks. I just want to remind everyone as we close that if you want, you can get Patrick's chart text not just once a week, but every day with a free trial of Big Picture Trading, Patrick's service. You can find out more at bigpicturetrading.com or on page 13 of the slide deck.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at MacroVoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week, free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.